let's connect with our experts then and try to find an answer to that. We are being joined by Kunal Bothra, Mayuresh Joshi, as well as Naresh Mirani is on the show with us. A very good afternoon, gentlemen. And Kunal, help us with your first take on this recovery that we have witnessed today on index.
Yeah, I think it's been a decent recovery for the index from the intraday lows. Of course, first half an hour, first 1 hour, we've seen more of sell-off across mid caps and small caps. Where at one point of time, and even a few large cap names, the heavyweight names, for example, like Reliance and HDFC Bank. But I think now in the second half, we've seen a very good recovery across mid caps and small caps. And also on the charts, I think what's interesting on the Nifty front specifically is we've seen a breakout on one of the indicators on the hourly charts, and that has happened after almost like 1 month of the index trading into a downtrend. So I think more or less around 10th or 11th of February is where we'd seen the downward signal for the index. From there, we'd seen the index correcting from 23,750 mark. Those indicators have started to reverse on the positive side for the indices, which means that what we are seeing as a recovery on an intraday basis, I think should see a follow-through up move. So I would probably be of the belief that maybe a short-term bottom could be at place, and from here on we could be looking at least another 150 to 200 points on the upside.
Okay, that's the take coming in the index. Let me welcome on board Naresh as well. Naresh, good recovery actually within the broader markets. What is it that you're making of, the texture of names? You've got a Voltas, REC, Prestige. Does it seem like this is genuine buying?
So it's a decent buying on the small cap side more. The mid cap has also recovered well. But names which have, say something like Voltas had already been recovering for the last few sessions. But we are seeing many stocks which are in a one-way downdrift today have given reversal signals, at least on an intraday basis. So now we watch out for what is the action by FIs going forward. 22,300 on a price point on the Nifty spot, and maybe any short covering seen on FI derivative numbers would be an indication of reversal. For now, looks like 22K is holding on for a few sessions.
Right, so that's the take on the broader markets. But Naresh, help us with your take on the sectors which will participate on the very first go in this sort of a recovery, if you really have some confidence in that. Because for today, yes, of course, the benchmark indices have recovered, but all these stocks, especially from the broader end of the market, Mayuresh, I beg your pardon, I wanted to have your take on this one, that these stocks within the broader basket have corrected around 30 to 40%. Anything that is standing out for you at this point in time, which can actually participate from the forefront in this sort of a recovery?
Good afternoon, Shrishti. No, the own sense is that it's going to be very, very selective as far as the broader markets are concerned. And you're absolutely right. I think if you probably track the NSE 500 companies, after 2015, the COVID crash and 2022's crash as well, only 10% of the stocks are trading above the 200-day simple moving average. And therefore, I think if you're probably looking at a large part of the broader markets being butchered, I think that's the right way to probably put it. How will earnings play out? Going to be extremely interesting for the broader markets, but specific pockets like agrochemical stroke, rural themes is something that are throwing up in our sector rotation software pan-ray. We've also probably got hospital stocks which are coming up where the earnings have been pretty reasonable so far. And therefore, I think expectations in terms of earnings will bring up. But for a large part of this pool, whether it's agrochemical companies, some select fertilizer companies, you've seen tractor makers post decent numbers as far as the February or the January sales are concerned as well. And therefore, rural themes should come back. Hospitals as a space should continue doing well. And among the mega themes, my own sense is that banks selectively should continue doing well. Again, historically, what we've probably seen that after such a huge lull and a correction and a downfall in the markets that we probably got, the next rally that comes through and the sector that leads the rally, it might be a totally different stock leading the rally as far as banks are concerned. And therefore, I think we've got our eyes focused on Kotak Bank, particularly within the large cap names, where our belief is the numbers in Q3 have been reasonably better. The expectation in terms of slippages might continue in Q4, specifically on the microfinance book, which is only 8,000 odd crores of the total book of Kotak Bank. But that should largely get compensated in terms of asset quality pressures coming off in the retail book, cost to income ratios remaining stable. NIMs have remained extremely stable at 4.93 odd percent. And therefore, with the addition of the Standard Chartered book as well, the expectations in terms of some element of clawing back of CASA, along with improvement in NIMs as well, along with moderation in overall slippages and cost to income ratios, should augur well for return ratios. So I think banks selectively might do well. We are keeping our eyes closely on Kotak Bank within the larger groups.
Right. Okay, let's try and understand why exactly the capex theme is under focus once again. And in view of assessing the capex utilization in various ministries, the central government has reviewed the status of key infrastructure projects in ministries such as railways, power, transport, etc. According to sources, 75% of the targeted FY25 capex has already been achieved. Prakash, my colleague, is here with more details on the same.
Yes, sir. We are learning from our sources that the government has reviewed the status of key infrastructure projects in the country. Infrastructure projects of ministries such as railways, road transport and highways, telecom, power, coal and housing ministries have been reviewed. More than 1,700 key infrastructure projects comes under central sector have been reviewed by the government. And this is, a first such assessment in the year 2025. And the most important part is that the capital expenditure has reached 75% so far by Jan 2025. It's a very significant development coming in, and this is against the revised estimate of 10.18 lakh crore for the financial year 2025. Along with that, the ministries have been told to achieve 100% capital expenditure target for the financial year 2025. As you were aware, that the capital expenditure was little slower during current financial year due to Lok Sabha elections. But after that, it gained momentum and we have seen relatively higher spending during the second half of the current financial year. In addition to that, the government has also released rupees 1.15 lakh crore interest-free loans to the estates as against a revised estimate of rupees 1.25 lakh crore. So some positive development when it comes to capital expenditure target. And the government is also hopeful to achieve rupees 11.21 lakh crore capital expenditure target set for the financial year 2026.
All right, Prakash, thank you so much for getting us all those details. So 75% of FY25 target related to capex has been met, and all eyes on the next target of 11.21 lakh crores for FY26. But taking a look at the markets, a good recovery underway, but select pockets are definitely doing well. And one such space is the hospital space, because within the broader markets, you'll see Narayana Health, that stock is higher, up around 10% in trade right now. And what I see is stocks like Max Healthcare and Apollo Hospitals from the FNO basket are doing pretty well for themselves. But Kunal, anything that you are spotting at this point in time, because Narayana Health, I believe that has been a different case altogether. But from these beaten down names like Apollo Hospitals, Max Healthcare, any opportunity here?
So Narayana Healthcare at current levels of 1623 plus, I would not be too keen to buy, because the stock at current level is crossed about the 3 sigma Bollinger bands on the upside. So 1596 approximately is where the band is, and the stock is trading at 1620 plus levels. So which means at current levels, I would actually believe that this could be a good time where short-term traders could look at profit booking into this thing.
Okay, just look at some of the other names and look at what's happening within REC and PFC. Of course, these stocks are on a tear. CLSA, remember, came out with a note on both these counters, REC and PFC, wherein they've upgraded them to a high perform now from the earlier to outperform that is. And the target price as well has though that has been altered, and that's been brought down a little bit after the recent correction in the market to 525 on PFC, and for REC from the earlier 590, it's been brought down to 525. Bajaj Auto, of course, has been a strong one. Their total sales have seen an uptick of about 2%, and remember, these numbers came out just this morning. They stand at about 3.52 lakh units, and for Ola Electrics, they're set to cut more than 1,000 jobs to try and stem their losses. That's what the news agencies seem to be reporting. And that weakness, of course, is being felt on Ola, which is currently down by about almost 3%. Having said that, what's peculiar about today, Kunal, is the selling in the private banking names. Ex-Kotak and HDFC, IndusInd Bank, Axis, all of them under pressure. What's that telling you?
Yeah, it tells you that maybe the residual selling which was there into these stocks, which was spending into these stocks, that's happened. Now I believe that there could be a change of texture across the the larger cap names also. And for example, today you've seen Kotak Bank, Axis Bank being a lot more resilient when you look at this on a net basis as compared to stocks like HDFC Bank, which have been on the receiving end, when you look at the price performance throughout the day. And this is just to almost exactly negate what happened on Friday, when HDFC Bank was absolutely flat and was more sideways and positive throughout the entire day, when the markets were seeing a heavy selling pressure. So I think that that kind of a negation generally happens on an immediate basis, and that happens once the market expects these large cap stocks on an immediate basis to get into recovery. But then there comes a stage where these stocks disappoint for a couple of days, and then these stocks, they pick up price action yet again. So I think out of the two large cap names, for example, specifically Reliance and HDFC Bank, I would actually believe that HDFC Bank at 2%, 3% down where it's trading right now could actually be considered as good contra bet, because there would come a time when many of these private sector banking stocks would require the more formidable stocks to outperform. And I think in that context, HDFC Bank can stand to outperform from here on.
All right, that's the take coming in on the banking space. But just a while back, there was a news flashing on the bottom of your screen with respect to IRCTC, wherein the government has upgraded IRCTC to Navratna status now. And that's the news flash coming in on this counter. But Mayuresh, though this is just to make into the headlines, but talk to us about the business prospects for IRCTC, because the whole travel and tourism theme is buzzing off late. And IRCTC, well, of course, we all know about the moats lying there, but how do you see the growth of IRCTC in terms of the financials, and do you believe that there's an opportunity for an investor to go ahead and chip in some money here after the recent correction?
You're absolutely right, Shrishti. I think the big picture argument always has been in favor of IRCTC. I think it is one of the biggest ticketing players in the country. More Vande Bharat trains have been introduced, a lot more expected in the pipeline as well. Railway stations have got renovated. You're probably looking at railway lines which are probably getting refurbished as we speak. Safety mechanisms being put in place. Therefore, a lot of tailwinds happening for the entire sector as well, and a decent allocation that has happened through the budget as well. Being one of the leaders as far as the ticketing platform is concerned, what they've also forayed into in terms of Rail Neer as an example, there again, I think the margins have been pretty decent as well. But they've been lagging in numbers very, very earnestly. And therefore, I think the kind of performance it has been an indicator in terms of how their financial performance has been, which probably has been on the downside. Now, again, I think the next few quarters, there is some element of hope that numbers should start improving. You've probably seen this quarter where the Kumbh has happened. I think a large element of train travel has probably happened across the length and breadth of the country. As we head into Q4 and Q1, and as summer vacations will be around the corner, you will probably also assume and expect a large part of the ticket booking, which is the heavy lifting that IRCTC does in Q1 and Q3, when the holidays normally coincide, to probably be the best quarters in terms of the reporting numbers. But a large part of their business elements, the hope now is that a large part of their earnings underperformance is largely behind us. As we are seeing a large part of rural recovery take place, there is expectation and hope that earnings might have bottomed out for IRCTC. And the best quarter, which is to come in this quarter and the next quarter, I think the numbers will be relatively better enough to probably re-warrant or warrant back some element of an earnings revision or re-rating for the stock. So yeah, I think hoping that, and the hope is that the numbers will come through, hoping numbers will come through positively, reflecting positively in terms of the prices.
But Mayuresh, do you not believe that to cash in on this entire travel and tourism industry, the best way is still hotels or maybe aviation?
So Aisha, again, both. Largely, I think aviation will continue doing well. Again, I think the same logic probably applies to a large part of the travelers for home, and same logic for IRCTC. I think the best quarter will come in the coming quarter when the summer vacations coincide. Again, I think what you're probably looking for aviation stocks, crude has probably remained far more stable, and therefore 45% of their input cost is the aviation turbine fuel, which remains constant. Obviously, the currency is depreciation, so a large part of the benefits that come through with stable crude probably get offset with a depreciating rupee. But to a large extent, I think the new fleet additions that are going to happen for Air India, for Vistara, or for the other players as well, is still going to take time. And therefore, I think Indigo might continue its share in terms of both the leadership position that it has in the skies, as well as the load factors, and therefore the margin performance as well. But hotels as a space, in my opinion, Aisha, should continue doing well. Obviously, I think with this entire team coming back in focus, hotels and hospitality should continue largely doing well on the premise of average room rates being relatively higher, expectations of ARRs being maintained or going even higher in the next couple of quarters probably is a given at this point of time. A large part of the hotel universe is adopting an asset-light model. If you see Lemon Tree, Chalet, if you're seeing Indian hotels to a large extent as well, or even the smaller players, I think there is sufficient amount of growth that will come through with not much of leverage adding onto the balance sheet. And asset-light model ensures that the dynamics in terms of top-line growth, margin performance continues as far as balance sheet is concerned. And then for hotels as a space to continue with this team, selectively looks good as well. So Indian hotels, as an example, might continue doing well, even if valuations are a little bit.
All right, Mayuresh, with this, we'll let you go on that. Really appreciate you taking the time out and speaking with us. But in the meanwhile, let's also try and find out some of the trading bets. Kunal, you go first. Help us with your closing trade ideas.
So I'll go with the BAN NTPC. That's a chart which is looking a lot more stable. I think at current levels of 310, 312 on the spot basis, would look out for a near-term upside of at least 3 to 5% kind of a swing return over the very short term.
All right, that's a buy coming in on NTPC. So let's watch out for that. But Naresh, what about you?
So that would be about L&T Finance. The stock has made three bottoms around this 130 to 135 mark. And today also trying to make a comeback. So expecting some follow-up action here towards 145 to 145 to 150. Stop loss to be kept at 135.
All right, so let's watch out for L&T Finance as well as NTPC. So two buy calls coming in from our experts. But with